Hi, and welcome to Market Conversations. Just want to do a quick video on Alibaba. But before I continue, just want to let you know that I am not a financial advisor. This is just for entertainment purposes only. Today, it closed red. And this morning, it was actually green. It went to a high of 85.39. And it just couldn't hold because the overall market sold off towards the end of the day. Alibaba only follows the market when it's red, and it doesn't follow the market when it's green. I've been following Alibaba for some time now, and that's just the pattern. Past few weeks now, Alibaba only had one green day a week. So hopefully we can get 2 green days this week, but today would have been it. Just couldn't hold. We take a quick look at a 6 months daily chart. You can see that it went to a high of 121 back in January. And if we go further back, that again, it hit 120. This was back in July. So it just couldn't break that 120 resistance and just started to sell off, hit a low of $58, came back to 120, and then it sold off again. And now we are in this range of 80 and 85. So we can see that the volume is pretty high today. And if we take a look at the call options, so if you bought calls yesterday before market close, you made money this morning. But if you bought calls today in the morning, probably are down on those. And if you take a look, there is a lot of volume for the 90 strike calls, which are going for $9 right now. And the chances of reaching $90 is very slim just because the overall market is red and it seems pretty bearish right now. But you just never know. Maybe Alibaba would do the opposite. When the market is red, Alibaba would be green, but I have not seen that happen. I've seen it when the stock market is red, Alibaba is red, stock market is green, Alibaba is red. And if you take a look at the 21 April, we see a lot of volume for the calls, especially for the 100 strike calls. They're going for $58. Seems pretty low, but it can get lower if BABA either doesn't move or goes down. You can see that the open interest right now is 36,000. It's pretty high. If you're thinking about getting into Alibaba, I would suggest going further out in expiration dates or just buy shares. That way, there's no expiration dates and you can hold them as long as you want. I made a mistake of buying too many call options back when the stock was around 150 and they all expire worthless. I lost quite a bit of money. And we are currently trading at 83. A lot of people thought the stock was going to go to at least 200 last year and the year before that. And people are saying it's undervalued, but it's not based on fundamentals, especially these Chinese stocks. It's based on political risk. If you had just bought Amazon, hit 100, Google, at least they're outperforming these Chinese stocks, but who knows? And when we take a look at this chart, maybe it's time for Alibaba to go back up. You can see this is an inverse head and shoulders. If we take a look at the article here, trading the inverse head and shoulders pattern, if we don't go down here, it is an example of a bullish reversal pattern. This means that the price action and trend that occurred before this pattern developing was bearish. The inverse head and shoulder pattern often shows up at the bottom of a move in the market. That is not to say that this pattern cannot develop at the top of a market. It can. Similarly, we can see standard head and shoulders patterns emerge at the bottom of a move. The inverse head and shoulder pattern is one of the most powerful and consistent bullish patterns. Let's take a look at some components that make up this pattern. The pattern is made up of 3 troughs or 3 triangles. The left and right shoulders should be close to symmetrical, meaning they should be very similar in their shape, same time in price measurements. I found this to be very, very important, but often overlooked condition that helps increase the success rate of this pattern. Volume tends to decrease. Volume is highest on the left shoulders, then falls into the right shoulders. Patterns that have volume dropping on the right shoulder have a probability of becoming profitable. The neckline must be broken for the pattern to complete. The breakout above the neckline must be on the higher volume. So what does this look like? Inverse head and shoulder. The chart is Microsoft's 15-minute chart. The image above is an ideal inverse head and shoulder pattern that you could want to see. The left shoulder low is above the right shoulder. Volume decreased as the pattern developed, and the two shoulders are relatively symmetrical. So you see the left shoulder, the right shoulder, and head. A quick note about symmetry. It doesn't have to be exact. Well, you can see that with Alibaba, it is almost exact. There is a big difference between the standard head and shoulder pattern and the inverse head and shoulder. With the regular, we never take a trade until the neckline is broken. Attempting to anticipate the formation of regular head and shoulder is akin to chasing strays and flushes in poker. With an inverse head and shoulder, we can enter early. This chart's almost identical. Let me know in the comments if you guys are buying more shares of Alibaba or if you're buying calls or puts. And thanks for watching.